In this video, I'm going to be explaining why Vici Property, stock ticker VICI, is one of my favorite real estate investment trusts. And if you aren't familiar with this company, this is an experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations. They own some of the most iconic entertainment facilities on the Las Vegas Strip. So this is very high-quality real estate that we're talking about here. The company is currently trading at $31.04 per share, and over the past year, down around 6%. In year to date, actually down around 2.24%. Now, the company has a nice starting dividend yield, currently sitting a little above 5% at 5.04%. And if we look at the dividend history for this company, over the past 5 years, they've actually done a really good job of increasing those dividend payments year over year. You can see in 2018, they were paying out around 16 cents per share every single quarter. Jump forward to now, it's now sitting at 39 cents per share every single quarter, and they're actually due for another dividend increase. So if we look at those dividend growth rates, we can see really solid growth rates. The 3 years sitting at almost 10%. And that's really good for a real estate investment trust. In the 5 years, sitting phenomenally high at almost 30%. Now, I don't expect it to be that high moving forward, but I do expect their dividend growth rates to exceed that of most other real estate investment trusts. Now, obviously, we need to look at the dividend safety also. And keep in mind, when we're looking at a real estate investment trust, what we actually want to look at is the AFFO payout ratio. That's the best way to judge the safety of a REIT's dividend payouts. And you can see that forward-looking AFFO payout ratio sitting at 75.28, and the trailing 12 months sitting at 75.36. Now that's actually exactly where the company wants to see it at, and I'll explain why that is here in just a moment. Before I dig any deeper into this company, I really want to get more into the details of how this company operates. So what we're going to do is we're actually going to jump over to their investor presentation and look at a few key points that I think are really important to understand if you're considering Vici Properties. Now the first thing that I want to point out is Vici Properties is a triple net lease real estate investment trust that owns one of the largest high quality portfolios of market-leading gaming, hospitality, and entertainment destinations. Now we need to understand what is a triple net lease REIT. In a triple net lease, the tenant is responsible for paying things like property taxes, property insurance, and property maintenance and repairs. This shifts a significant portion of the financial responsibility for the property's operation and upkeep from the landlord to the tenant, and as a result, landlords often receive a predictable stream of income. So in my opinion, Vici Properties structuring their tenants to a triple net lease contract is actually a huge benefit to them. Now the next key point that I want to point out with Vici Properties is how they are inflation protected leases. 50% of leases with CPI-linked escalation in 2023, and 96% of their leases with CPI-linked escalation over the long term. Now that is huge for a few different reasons, and like we already know, we saw a huge spike up with inflation in 2021, sitting at around 7%, and 2022 sitting at around 6.5%. But because Vici Properties has inflation protected leases, that means that the amount that tenants pay in rent to them will increase dependent on inflation. So that is a great sign. That means inflation will not hurt this business nearly as much as other real estate investment trusts. Now, if we keep scrolling through this presentation, the next thing that I want to point out is that 100% of their tenants have triple net leases. We already touched on why that's a good sign, but to have all of their tenants at a triple net lease, again, that's a huge win for this company. We can also see that their Las Vegas real estate makes up the vast majority of this company's rent. We can see 40% coming from Caesars, that's Las Vegas, 36% coming from MGM Resorts, another Las Vegas resort, 9% coming from the Venetian, and 5% coming from Seminole Hard Rock Entertainment. That's basically at least 90% of all the rent they collect right there coming from Las Vegas. And if we scroll down even further, I'm going to show you one of my favorite things about this company. 2020 rent collection. You can see right here. A lot of real estate investment trusts really struggled in 2020 and weren't able to collect 100% of their rent, and some of them ended up having to cut their dividends due to that fact, and some REITs are still struggling due to low rent collection during 2020. But we can see Vici Properties was able to collect 100% of their rent in 2020. To me, that's a huge sign of the health of this real estate company. A REIT is only as good as the tenants that it has, so if they're able to collect 100% of their rent during one of the most difficult times for commercial real estate, to me, that makes me think you can feel pretty comfortable about these companies being able to pay rent in the future. Not only that, but the remaining lease term for most of these companies sitting at 42 years. So these contracts are structured for long term. Now the good thing about all these things that I pointed out, such as the 2020 rent collection, the remaining lease term, the triple net lease structure, and their contracts being inflation protected, if we scroll down, the result of this is massive dividend growth. And you can see Vici has raised its 100% cash dividend every year while targeting a 75% AFFO payout ratio. And that's something we just talked about just a moment ago. If we go back over to that dividend safety, we could see the trailing 12 months and the forward-looking AFFO payout ratio, both sitting right at 75%. And again, the result of that is really nice dividend growth. You can see they saw 9.5% growth, 3.5, 10.9, 9.1, and 8.3% dividend growth. And keep in mind, we're talking about a real estate investment trust with a dividend yield of over 5%. It's not very often that you see a real estate investment trust that can increase their dividend payments that much over a short period of time, but they also have a pretty high starting dividend yield and a relatively safe dividend payout. Now, when we look at how Vici Properties has performed year to date, I'll go back over to this tab on Seeking Alpha, and you can see they're down 2.41%. In comparison with the S&P 500, the S&P 500 is up 18.2% year to date, so in my opinion, this does beg the question, is Vici Properties at $30.99 a share currently undervalued? And to answer that question, we need to jump into my REIT valuation spreadsheet where we'll be looking at a few different valuation models to see if we can find the intrinsic value of Vici. Like always, if you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Now I'll come up here and plug in Vici, V-I-C-I, and hit enter, and you can see all of this data will automatically load in. Now we can already see the 500-day change chart over here. We've already touched on the dividend metrics. Everything looks pretty solid, honestly, from a dividend standpoint. Analysts currently have a target price of $37.50. Institutional ownership pretty high at around 98.6%, and the beta sitting at 0.91, so you should see a little less volatility than that of the market. Now, the first valuation model that we're going to be looking at is the AFFO multiples valuation. Basically, what we're doing is we're looking at how the market is valuing companies that are similar in structure and looking at that price to AFFO multiple and applying it to Vici Properties. So you can see our comparable companies right here, and obviously there's no perfect comparison for Vici, but I did try to use some companies that I felt were somewhat similar in structure. The average price to AFFO for these companies was sitting at 18.18, but Vici Properties is currently trading at a price to AFFO of 14.7. So when we apply that same price to AFFO to Vici, we come to an intrinsic value of $38.31. That's a decent bit higher than that current trading price. Now, typically I like to look at the historical price to FFO model next, but we really don't have enough data on Vici Properties because they haven't been trading publicly for very long. So I don't feel like it's the best valuation model in this scenario. Now, the next one I'm going to look at is one of my favorites, and that is the dividend discount model. And essentially what this does is it values a company based on how much they pay out in dividends and how much that dividend is increasing year over year. So what I've done is I plugged in this quarterly dividend payments so we can see those year over year dividend payments and the year over year dividend growth rates of 3.5, 10.7, 9%, and 8.33. And like we've already talked about, that's pretty good dividend growth for a real estate investment trust. Average growth rate almost 8% out of those years that we just looked at. Now moving forward, I'm projecting a dividend growth rate of 4.25%. I do believe it's possible for it to be a little bit higher, but I'm going with that for this scenario. With a discount rate of 8.5%, we come to a dividend discount model price per share of $38.27. Again, a little bit higher than that current trading price. So when we jump over to my output tab, we can see the two valuations that we used in this scenario, AFFO multiples and dividend discount model. I didn't feel like the net asset value was the best valuation model in this scenario, but when we average these two together, we come to an intrinsic value of $38.28. Current trading price currently sitting at around $30.97, which is a pretty decent difference. If we apply a 10% margin of safety, you could see your acceptable buy price sitting at around $34.46. With a 20% margin of safety, our acceptable buy price sitting at around $30.63, which is very close to that current trading price. Now, complete transparency, like always, I actually added some more Vici Properties to my portfolio last month and this month. Like we've already talked about, I think the company is a little undervalued at its current trading prices, but strictly from some of the things that we looked at from their investor presentation, I think there is a lot to like about the way this company is structured. Their leases seem to be structured very favorably. So if you are interested in real estate investment trusts, this might be one that's worth looking into more. And like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.